Welcome back, everyone. It's Tuesday, December 1st. Thank you, everyone, for joining us. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us every week, every Tuesday at noon. We do a recap of the markets and take a look at different topics. And today we are going to talk about the markets hitting all-time high, why we're seeing that, and what that means as we head into the holiday season, such as it is this year. But let's jump on into, here we go. So as always, what we're going to cover here today is information purposes only. Don't take it as advice. I'll always seek the help of a professional or give us a shout to help you with your specific needs. These are general concepts and you should really take a look at your unique situation. Or do your own due diligence before acting on anything you hear here or anywhere else, actually, especially on the internet. Always make sure it's applicable to your situation. As always, if you have any questions, you can just click that little Q&A button and type in your question. Or if you're watching on a replay, or if you think of it afterwards, go to mikeonmoney.com. That's our portal where you can access our emails, phone numbers, all our social media accounts where you can find this video and other videos the like, and also all the educational material that we put out. So head there if you have any questions, or as I said, you can just ask it on here today. We'll try to get to it at the end if we have any questions. Otherwise, we'll definitely follow up with you later. So let's jump into what we're seeing in the economy and what's going on out there right now. We're watching for the GDP numbers for September in Canada. Actually, they are out, so I'll talk to it a little bit later. It just came out today. U.S. Manufacturing reports are expected for November, is where we take a look at that. And also all the banks are starting to report. So we've seen Bank of Montreal already come out with the numbers, and we're waiting for Scotia, TD, and Royal to have their numbers out shortly. So kind of an indication of what's going on in the economy when we see how the banks are doing, see what lending's like, and how that's affecting in both companies and individuals. As far as the stock markets go, we're still seeing some good numbers, obviously very positive today. It was a little bit of pullback yesterday, but I think just a bit of profit taken after a good week and a good November. We saw a great November, really after the election, and of course the vaccine news. A lot of enthusiasm around the potential of the vaccines coming out. So we're seeing pretty much all the indexes rallying through November and starting off December pretty strong so far. And we're also taking a look at the NASDAQ on the technology front, where we've seen that gain heading through November as well. Let's take a look at what's going on from the analysts out there. Investors are weighing prospects of the corporate earnings to set all-time records. So, despite everything that's been happening in our economy, with the virus, the pandemics, the shutdowns, we have actually seen a big jump in business in different areas. Obviously, tech has been at the forefront. We've covered in different videos the different sectors that have been excelling. So we are seeing a sector, or sections, I should say, of stocks out there in the market hitting all-time highs and hitting record sales and record revenues. They are also being hit with some added costs, and we're going to see a little bit of that when we talk about some of the earnings come out. We've already seen some, especially in retail, like even the grocery stores that have done very well as far as revenue goes, but they have had to add extra costs, whether it be shipping deliveries as more and more people order online, or even in store or in person, I should say, extra measures, plexi, extra cleaning being done, more labor costs as they try to keep people safe as they go into the stores or into the establishment. So we are looking for that as we see the earnings come out. Small caps keep surging as vaccine aid recovery. So we talked a little bit about different different capitalizations, different size of capitalization. So large capitalization, sorry, companies, mid-size, and small cap or small capitalization companies. So whenever we go through a recovery in an economy or a big shift in the economy, you know, your large caps benefit from the traditional, the more mature markets, but it's that new small cap, those up and comers, especially out of something like the pandemic, where we're seeing, as we've talked about quite a bit through this series, is the disruptive technologies or the disruptive companies. And it's not always technology companies, but they're using technologies in a different way to disrupt an established sector. I've used the example in the past, you know, the gyms, where we've seen this move to home gym or online personal training. We've got the Pelotons in the world. Apple Fitness has just rolled out. Amazon's rolling out with their home fitness and many others. So it's that disruptive technology coming in the smaller companies, and they see a surge in growth. So that's something to keep an eye on as we go into the new year. Of course, there's going to be more and more. I think early on I kind of mentioned, you know, the pandemic certainly is going to hurt and affect a lot of businesses, especially certain sectors. But when these things happen, it's tragic in that, you know, people's jobs are affected and companies are being affected. But it is also a little bit like a wildfire that will go and burn through, you know, a forest, but it also clears out the debris and fertilizes for new growth to happen underneath. And that's what we see in the small cap sector. So we're going to keep a really close eye on that. Oil prices, we'll talk a little bit about them. They have moved up a bit, but still really struggling going into 2021. OPEC plus, you know, continues to try to negotiate, you know, the reduction in production globally to keep the prices as high as possible. But the demand really hasn't seen there. There's not seen a lot of traction for that to recover. Biden's out there picking his economic team and his cabinets. So a lot of optimism around a lot of his picks. He's picking a lot of experienced people. A lot of people have a lot of knowledge and also very diverse, which is great when it comes to getting inputs from all aspects. It makes a big difference in the quality of information and information flow. So really good. And 3 top women being picked to the top economic post, which is a big shift for the White House diversity. U.S. housing and manufacturing data is suggesting a bit of a slowing in the recovery. Nothing to be overly concerned about. We've talked about the numbers through basically since September when we started to see more and more reopening. Obviously, that was pent-up demand. There was a big surge in all the numbers from the complete shutdown earlier in the year, and those are tapering off. We've seen that pretty steadily every month over month. It is still growth. It's just slowing growth. That's pretty normal. You know, again, it's something we'll keep an eye on, but nothing to be overly concerned about. The Fed has looked at extending 4 of the emergency liquidity programs until the end of March. And this is just to help companies refinance out there that might have either stalled a little bit on debt or had some debt come due through the closures or through the pandemic, and just help make sure they have liquidity to stay in business and get them through as the revenues pick back up again. As I mentioned, OPEC is leaning towards extending those cuts. So they had an agreement till the beginning of January with the OPEC plus countries to reduce global production, to keep the inventories lower, to keep the prices up higher. The OPEC plus group is trying to work with the OPEC countries and also those outside of the OPEC group to keep those numbers low. There's several countries that aren't abiding by those rules already, and there's a lot of pressure by them to continue. As you know, oil is a big revenue source for the countries as far as their GDPs go, and they need that revenue to kind of keep the lights on a little bit. So even if they don't mind selling at a lower price if they can keep revenues coming in. So there is this balancing act that's happening with OPEC plus right now. As we do every week, we take a look at the numbers, and unfortunately, they're not getting any better. Almost 64 million total cases globally. just approaching, if not already there. The 1.5 million total people have passed since the start of the pandemic. Canada's over the 12,000 mark as far as those who have deceased through or related to the COVID-19 virus. And in all countries, still seeing large numbers, still seeing an increase in numbers. This second wave has hit quite hard. We're starting to see the pressures on the hospitals now, especially in the ICU beds through the US and in Europe, getting worse and worse. And Canada obviously creeping up all the time, which is the challenge, as always, is how taxed or how much pressure isn't on the hospital, the medical system, in order to provide care for those who need it, not just those suffering COVID. Of course, if you have other medical needs, if those beds are all taken, it's hard to treat everybody properly or keep the high quality of medical services that we need and are used to. As always, this list is not complete. We truncate certain countries out just to fit it on here. We try to say to the majors, but you can always go to worldometer.com and see a full list there if you're interested in some other numbers. So let's take a look at the individual markets. We'll take a look at the US first. As I mentioned, we've seen the indexes rally through November, a record since 1987 for 1 month's performance. The indexes did dip a little bit yesterday, just some profit taking coming off. That turned around this morning, so nothing to be concerned about there. The US dollar did show a little bit of strength after its long downward trend. That's just a bit on the change in risk assessment with the vaccine, but nothing that I think will really reverse the longer term trend that we're likely to see there. As I mentioned, the oil prices are falling. And if you haven't listened to a lot of these, I know I talked about the oil sector a lot. It is a big part of the Canadian economy, or certainly our GDP. But the reason we're seeing this is not just the pandemic. Oil is a shift and it is a decline in industry, or fossil fuels is a decline in industry. Not going away, but demand is shifting as other technologies take over, become more effective, and more money flows into them to help develop them. Now, the technologies obviously have a long way to go, and so does oil, or so does the fossil fuels, but they are in that transfer stage of the shift that we've seen with things like coal in the past, and certainly we've seen it with fossil fuels now. Coming up in the US, as I mentioned, we're looking at the supply management and the factory numbers to come out. We're expecting, a little bit of a slip actually from October, just as, as I said, things are slowing down a little bit after that initial couple of months of surge that we saw when things opened up again. Salesforce is expected to post their earnings. If you're not familiar with Salesforce, they're one of the largest, if not the largest, contact management software. So this is kind of the Rolodex, the new electronic Rolodex that businesses use around the world. It's expected to post a large rise as more and more licenses had to be bought for people who are working remotely, but also their cloud service. So people who aren't in the office, offices are not just for contact information, but are moving to cloud services more and more, and Salesforce is able to charge for that. So we should see some good numbers out of them. And we talked last week about that cloud sector as far as IT or technology goes, is another sector we're seeing some massive growth in as more and more companies move to cloud. Also coming up, Moderna is to seek US and EU approval yesterday. They're in that process, which they're saying a few days to get those approvals. Countries around the world, both the EU, UK, and the US are pushing for a December start to roll out on the vaccine. Canada's in that bucket as well. We do have, I think we actually have one of the largest orders with Moderna. We're Astra companies, but I think Canada's expected in early January to have approval, I heard. The S&P company, the S&P Global, is looking to buy IHS Market, which is a market data and research provider. So they're looking to expand their data empire. As data becomes the new gold for businesses to be able to mine data, we see that in the, when we talk about Facebook and Amazon, Google, all, of course, building businesses and building empires on data mining. So figuring out what people want, what they're looking for, and providing those services, targeted services to them, or directly to people as fast and quickly as possible. Cyber Monday was set to be the biggest online shopping day in US history. So not a surprise here. Of course, online shopping every year for the last, I don't know how many years, has been the biggest as more and more people get comfortable with e-commerce, more and more people, of course, online shopping. That this particular Monday, or this year's Cyber Monday being the largest, is no surprise, as even more people have jumped to e-commerce as either they can't get to the store, they don't feel safe going to the stores just aren't open in certain areas. So not a big surprise. The real numbers that we need to crunch from that is total retail sales. So December, or the holiday season, traditionally one of the big numbers we look as retail sales as a whole to see how much people are spending. It's a good indication of how confident people are, whether it be in the economy, their work situation, or how much discretionary cash people have to be able to go out there and shop. So it's great. We saw a record for Cyber Monday, but really the numbers we have to add together are the brick and mortar retail and Cyber Monday's numbers, and compare that to a normal year of both those and see, was this a growth year for retail sales as a whole? Or was it, a decline compared to previous years? So are people feeling more hesitant about spending money? So we'll be looking for those numbers in the next week or so. GM is announced with Nikola Motors a reworked agreement. So I don't know if you followed this story. We touched on it slightly several weeks ago. So Nikola Motors is an electric car manufacturer competing directly with Tesla. And when I say that, mostly in that they came out with that they were going to be launching a truck called the Badger, an electric truck called the Badger, and I believe they had an SUV as well. And GM committed to putting, I think it was $10 million into Nikola. The shares were rallying. Then it kind of came out that the CEO, they had a lot of promo videos of this beautiful electric truck, and they had it going down this hill, and they had a lot of stats around its capabilities and its range. Then it came out that that whole video was shot with the truck just being rolled down the hill because there was no motor in it. So obviously there's a controversy. That doesn't mean Nikola isn't actually developing a vehicle. In fact, they are still planning to launch that Badger, but obviously the stocks tumbled on that. The CEO quit, but GM has reworked a deal with them, as GM is still committed to using their technology in their fleet and supporting Nikola to get out their so far 2 vehicles that they're working to get to market sooner than later. Some good news for Nikola, certainly for the employees and those who have worked really hard, the engineers, to develop the vehicle. And I actually do like the vehicle from what I saw. It'd be really interesting to see it with an engine in it. But it looks like a very interesting new competitor to the electronic vehicle market for North America. DoorDash is looking at going public. So there's a lot of IPOs. We've talked about the IPOs globally being very active this year. Of course, we have Airbnb about to launch, and they've just repriced theirs to go higher. And DoorDash is aiming to double the valuation that they originally were planning on to raise. Now they're looking at raising about 2.8 billion on their initial IPO. So that's going to be interesting. For those buyers, are they getting value at that level? Given that DoorDash is out there basically charging twice what they originally planned to at the beginning of 2020 when they were considering doing their IPO. Obviously, businesses picked ordering on takeout foods. More restaurants getting on the platforms, the 2 big ones being Skip the Dishes and DoorDash. And I guess Uber Eats is a big competitor in different regions. But DoorDash, you know, kind of coming out, and will be really interesting is to see how they do with profit and or how they do with profits, because there's been a lot of controversy around how some of these virtual services, you know, pay employees. Obviously, we see the big court cases happen with Uber that, you know, they treat their drivers as contractors, and the court's kind of saying that they have to treat them as employees, which is obviously higher costs to the firm. And we're also seeing a lot of pressures around what these companies charge the restaurants to deliver the food. So obviously, they also charge the restaurants a percentage of the total bill. And I know Ontario, as an example, has just passed a law limiting how much these services can charge the restaurants. So kind of a cap on the dollar or percentage that they can charge. So it'll be really interesting to see how that IPO does. There is a lot of pent up demand, obviously, given the double in valuation, but we'll see how it performs after it gets into the market. So we'll be looking for that once it come out before year end. Coming up in Canada, the third quarter GDP numbers I mentioned are expected to grow. Actually, they did not grow. They shrank a little bit from last month. So there was an expectation. So it was a little bit under, and that's just that slow. And again, they did grow. This is not a collapse of anything. It did grow, but things are slowing down a little bit. Obviously, the second wave is slowing things down as well. So I would expect, you know, kind of the December numbers to be a little bit off than expectations. That's not a negative comment on what the market's going to do. Just I think we're going to have to adjust our expectations going into December here and see how we get through this second wave. As I mentioned, the banks reporting, Bank of Montreal posted a drop in profit in the quarter, mostly on lower deposits and loan demands. So we've talked about the housing market, of course. Prices are up, but volumes slowed dramatically in the last couple of months. Fewer people are borrowing. You know, the surge in deposit, so, you know, kind of demand for interest, a lot of competition around offering some higher interest, which, you know, squeezes their margin between what they can borrow from the Canadian bank, the Bank of Canada, sorry, versus what they can loan out. So a lot of pressures around their profit margins. Not bad pressures in the sense that we're not seeing increased defaults on loans, just a decrease in demand, which could turn around very quickly if we get out of the second wave. People, you know, and we get the vaccines going, that could turn quickly. So we're expecting Scotia's numbers to come out also here in this week, and probably a similar situation to be seen there as well. Other news in Canada, you know, amid the surge in numbers, Canada's to unveil more spending. So we saw a peek into the Canadian budget, or look at to what they're talking about, another round of stimulus into the new year, and they've teased about $100 million. They haven't given a lot of $100 billion. Not a lot of details around that, as basically they've said it's going to go towards stimulating the economy's reopening, or re-energize the economy after the second wave. So a lot more details still to come out on that front, but they did come out with that $100 billion number. Canada's October producer prices have been down on lumber. Again, we've seen slower demand on housing starts or new builds or volumes on that front. So a little bit lower, still growth, but a little bit lower. The Canadian Indigenous people managed to strike a deal on the Keystone Pipeline. So this is years and years of back and forth with TransCanada Pipeline, or now called TC Energy. You know, they sold $1 billion stake in the Keystone price to an Indigenous group out of Saskatchewan, whose First Nation who demanded, you know, the original deal proposed to them was they would get paid a one-time payment to put the pipeline through, but they were really going for an ownership stake and ongoing revenues through the pipeline, as opposed to just a one-time buy. So that deal was struck, which you will push the pipeline further to push the project further forward. Canadian pension funds and insurances are seeking debt investment. So, one of the big areas for pension funds and insurers is they use debt, obviously guaranteed investment to fund their demands, whether it be pensioners to pay out, or insurers obviously to pay claims. But we're seeing that those interest rates shrink. So for the last few years, and we've talked about this certainly in our written works for the last couple of years, and more in the videos, this alternative or private debt market, there's been a lot of demand. So rather than the traditional, buying the bonds from the government or from the banks or from corporations, there's been a lot of private groups putting together debt finance and high quality debt financing at preferred rates and preferred terms in order to provide that to investors and pension funds and insurers. Is drying up, just like the banks are seeing the borrowing drying up. So we're seeing that on the private debt side of things as well. And we're also seeing where we are seeing some volumes, the quality is shrinking as some companies and businesses are under more and more pressure from the closures and from the pandemic. So that's a challenge for the pension funds and the insurers as they look for yield and quality at the same time. As far as the currencies go, the US dollar continued to weaken against its basket of securities. I said last week we did see slight increase, but overall the trend has been down, and that's been going for a while. And as we've talked about, we expect that to continue to slow over the next little while. It did fall against the euro as well, where we're seeing the euro and also the pound a bit of increase there as we get closer and closer to the Brexit deal, which looks more and more favorable that they might have a deal. In fact, they're talking potentially in the next week or two having some things organized, especially with Northern Ireland, which is a big outlier for the Brexit negotiations. Of course, there would be a hard border between Northern Ireland and Ireland, as one is in the UK and one is in Europe or part of the EU still. So it looks like they're making headway there. The Canadian dollar finished, or my last look this morning was 77.24, which is almost up a cent from last week. So very favorable on that front. Commodities, as I mentioned, oil. We did see it up at $45, which is probably the highest point we've seen since May. A little bit on probably over exuberance on the OPEC plus discussions, as they don't seem to be making too much headway there. And there's still very little volume from the institutional money as it has been exiting oil. Really, again, I talk about it a lot, I think every week. We don't see a lot of upwards pressures there for a little while. Gold ticked a little bit higher this morning, did pull back a little bit last week on the rally in the markets. But again, we still see that those stimulus packages driving that inflation number. So we're still looking at gold as being a good performer for 2021. And it has been for this year as well over the year. November was one of the worst months for precious metals as a whole when we look at all the metals together. And that's, again, just money flowing into the rally that we saw in November. So what do we see in the markets? Obviously these high pricing, are we in a bubble? Are we seeing an overvaluation in the market? Should we be concerned? Well, whenever we see record highs, we should always be concerned. We talked about, the potential of pullbacks last week, how to manage your portfolio through that, how to put some protections into the portfolio for a potential pullback without getting out of the market, because it could continue to go. So this week we're taking a look at what are the drivers in the market. Well, one, there's increased volume, and we've discussed a little bit. One of the examples I can give this is that company called Robinhood. You might have heard the commercials, but this is basically the mom and pop online. A lot of young people in there. I shouldn't use mom and pop, I guess. There's a lot of younger people who aren't mom and pops yet, out being bought, buying in through other people. And we've seen some really increased or driving in prices I've given some examples in the past where Zoom, which is the technology we're using here today, Zoom technologies, when the pandemic first hit and Zoom sales started to go through the roof, we started to see their stock increase, but we also saw another Zoom. There's another company out there called Zoom, a penny stock, that nothing was happening with that company. But these online buyers, inexperienced buyers, and that's why, at the beginning, I always say, consult with someone or do your own real due diligence before acting on news or a tip, because we saw that Zoom stock, go up almost 200-300% in value, and there was really nothing happening in the company. So what ended up happening, the people who owned that Zoom stock before just sold out of it, took the gift of the return, and the people who had bought it mistaken the stock for the real Zoom company, driving up the price, losing a lot of money as that corrected back down. We saw the same thing with Hertz when they declared that they were going Chapter 11 in the United States, or bankruptcy protection. The stock is basically worth zero, but some news came out that that they negotiated with their creditors, which just means the creditors get the assets. But again, we saw those inexperienced buyers seeing that as good news, driving the stock up almost 70% in one day. And again, that stock was basically worthless, and would be reissued to the creditors at a value, but those who owned it as an equity would get pretty much zero for it. So that we're seeing this inexperience through technology affecting the volumes in certain sectors in the market in general, and that is driving up part of the market. We've talked about it, to be very careful of the high publicized names or the very public names. When you see massive unwarranted moves in the stock price, it could be on these volumes, and you want to be careful about jumping in too expensive on those, because inevitably those volumes go away, or the news corrects that price as it realizes it was unwarranted. So that's one of the things we're seeing out there affecting these all-time highs in the markets. So it's something to be leery of. Low interest rates, so cheap money, sometimes called liquidity. So companies and individuals are able to get money at almost zero prices or loan rates globally. So that injects a lot of capital into the market, which is healthy. And both the Canadian bank and the U.S. Fed, and even globally, international banks have basically, or central banks have basically said they're looking at trying to hold these rates this low for 2 to 3 years. I think that's an optimistic view, because with all this printing of money will drive inflation, and this is one of the key tools in their shed that they can use to keep inflation low. They do want to try to use other levers to keep that inflation down before they pull the trigger on interest rates, because interest rate hikes do slow the economy down. But they do have a goal of 2 to 3 years. So when we look at the markets, this very low interest rates signal higher markets, because it's cheap for companies to invest in growth. It's cheap for people to continue to spend money. So that drives economies, that drives growth. So that's very positive. That's one of the reasons we're seeing these higher markets, and we don't see an end of that, at least, kind of even the most pessimistic views, certainly not into 2021, maybe at the end of 2021, maybe in 2022. I think it's optimistic of these of the central banks to think that they can go 3 years, but certainly for the next year or two, that looks very favorable. So as I mentioned, if you do have some debt, mortgage out there, it's a good idea to go out and look at refinancing those at these lower rates. Even paying the penalty over a 5-year period, you could pocket a healthy savings depending on where your mortgage rate currently is. And then lastly, government stimulus packages. Government's out there giving money away. Obviously helping, the goal of that giving money away is to help people and the economy and companies to get through this crisis and get through the pandemic. But in the meantime, as they add stimulus to the economy, that does drive the markets up, because that means there's more growth for companies, more spending happening. We saw the first round of stimulus come out, which, we saw that quick turnaround, and the market is very, very optimistic that the second round now, especially in the US, now that they're through their election, that the second round is going to come out in the early new year. Canada, as I mentioned, kind of came out this morning with their number. Not a lot of details around that. We're starting to hear a little bit of dribs and drabs around childcare benefits and percentage of support for lost income, et cetera. But we haven't seen the full package yet. But the market is anticipating that stimulus to come out. And of course, the other aspect, which can't be discounted, is just the return to normal, or whatever the new normal is going to be. But the vaccine, obviously, that's still a tunnel, and we've seen a little bit, certainly on Monday, a little bit of that optimism wane a little bit as the market starts to realize, the vaccine's not an immediate solution. It's going to take time. But that being said, it is at least that light at the end of the tunnel that we are moving towards a period of time or a day when we will at least have some sort of reopening, like full reopening, full access. Even if it's modified access, it will still be, access to businesses and industries. And the big ones obviously being travel and tourism and hospitality, all these things that we haven't had for a while. So those are the things driving the market. So those things we keep an eye on. Obviously, we expect these things to continue to grow. I do think December, the numbers are going to be a little bit more realistic when it comes to that. We're topping a little bit of growth here. That is actually normal for December. Plus, we're coming off the surge of reopening. But if we can keep those hospital numbers down, and we don't see further closures in the economy, we should move into the first quarter fairly healthy with all these factors in play. As far as the markets go, so keep that in mind. So that's what I have to talk about this week. Next week will be our final week before I take a holiday break, unless something massively happens that warrants a special breaking news edition through the holidays. So do join us next week. We will cover the weekly update. And we'll give you some extra news. We are looking at putting out a special video as well on Bitcoin. Of course, it's hit a record high as well. So I'm going to take on the challenge of trying to explain at least what's happening in that sector and what potentially to look for. If that's something that you've been following and are interested to, look for that on our channel here in the next little while. If you have any questions, as mentioned at the beginning, go to mikeonmoney.com. Love to hear from you guys. And with that, I wish everyone well. I wish everyone safe and happy holiday planning, as it were, that you can get out there and enjoy as much as possible. I'll talk to you next week and then into the new year. Thanks, everyone. Bye now.